Once you understand the brutal psychology of top 1% traders, you can rewire your brain to profitability. It's how I went full time and how dozens of other traders went from losing to payouts. And no, this has nothing to do with discipline, motivation, or how bad you want it. But if you don't fix all 7 of these, even a perfect strategy won't save you. The default metric for most traders is the weekly P&L. If the week ends in green, they are genius. If it ends in red, the strategy is broken and it needs to be changed. This is a fatal cognitive flaw known in psychology as outcome bias. It is the human tendency to judge a decision based purely on the result, completely ignoring the logic that created it. But the market can reward terrible behavior and it can punish perfect execution. And this creates an even bigger problem, which I learned during one of my first challenges. I was in deep drawdown and panicking, so I broke every rule in my plan. I removed my stop loss, doubled my lot size, and just prayed. And the miracle happened. The market reversed and I got a huge win instead of a loss. I felt invincible, but I didn't know I just set myself up for failure. Because when a trader moves their stop loss and the market eventually reverses to hit their take profit, their brain releases a massive hit of dopamine, instantly hardwiring the link between breaking rules and reward. One lucky win and suddenly he is walking around like he reinvented trading. The guy who removed his stop loss and lived to tell the tale. But eventually the variance will flip on them and they will blow their account like there is no tomorrow. To fix this, you must stop trying to control the output and start obsessing over the input. Your only goal is flawless execution because that's the only thing in your control. But flawless execution is useless if your math is just a fantasy. Because 60% win rate doesn't mean 6 wins out of 10 like clockwork. And when you don't understand variance, you get stuck in a 3-phase loop. There is a psychological flow called the fresh start effect. You get the high of feeling like you finally solved the market without actually making a single dollar. So you start trading it with full confidence. If you have a true 60% win rate, the math guarantees that you will eventually face losing streaks of 6, 7, even 8 trades in a row. You can perfectly follow your rules, take the exact right setups, and still get slapped in the face with a massive drawdown. And the strategy isn't broken, it's just doing what's normal. But because you expect linear results, those 7 losses terrify you. You become what I call a drawdown collector. You take the 6 losses on strategy A, get scared and throw the entire system in the garbage exactly at the bottom of the variance curve. And to fix the pain of those losses, you go looking for a brand new perfect system, which throws you straight back into the dopamine high of phase 1. To break this loop, your job is to accept that variance exists, lock your rules, and execute a full 100 trade sample without changing a single variable. But how do you actually lock your rules? 95% of traders think the answer is strict discipline, but relying on willpower is a massive mistake. Psychological studies prove that discipline is not a personality trait. It is a finite, exhaustible biological resource. Every single time a trader resists a FOMO entry or forces themselves to not move a stop loss, they burn through this mental reserve. But here is a trap. A casino removes the clocks and the windows to design an environment where losing control is the default state. Traders leave their broker platform open all day with a one-click buy button right in front of their face. They put a loaded gun on their desk, stare at it for 8 hours, and then blame their discipline when they finally pull the trigger. And after this, they make the ultimate mistake. When they eventually blow their account, they diagnose the problem completely wrong. They look at the red dashboard and tell themselves, I just need to try harder next time. I need more willpower. So they found other accounts, sit back down in front of the exact same loaded gun and try to fight their biology all over again. And this is the exact loop the prop firm industry is built on. Why do you think they give you a 100k account for a few $100? They aren't necessarily betting against your strategy, but against your emotions. The solution to this is a 3-step process. Step 1. Unsave your broker password. Make it a random 20-character string on paper so the sheer annoyance of typing it out blocks your impulsive trades. Step 2. Remove the gun from the desk. The second your trade is placed and your stop loss is set, you close the platform. Step 3. Blind yourself to the money. Look at your positions on TradingView and use other platform for placing trades only. And look, if you stop watching now, you will walk away with 3 of the biggest reasons traders fail. But the next 4 are the ones that actually separate the full-time traders from the ones who get stuck. A drawdown is the only time the market tells a trader what's actually broken. But they look away and blow the next 3 accounts, making the exact same mistake it was trying to show them. A drawdown can only be caused by 4 things. The first is variance. The losing streak the math guarantees was coming. Completely normal. The second is an execution leak. Moving stops, skipping setups, small stuff quietly bleeding the account. The third, that almost nobody checks, the broker is quietly robbing them. Widen spreads, slippage on every fill, stop hounds at 3 AM. And the fourth, the strategy is actually broken because it was never properly tested. All 4 of these feel identical from the inside, just a red number going down. And that's the whole trap, because most traders will just default to the fourth, completely ignoring the other 3. So before touching the strategy, pull your last 20-30 trades and analyze them. 2 things will show up immediately. Were you breaking your rules? Execution leak. Did the spread or slippage eat more than your edge predicted? Is the broker. But here is the problem. If your execution was clean and the broker is fair, you still can't know if it's just variance or a dead strategy. You need a bigger sample size, which most likely you don't have yet. So your only option is to keep executing until the data is big enough to actually tell you. Switching now just resets the count to 0 and guarantees you will never reach the number that gives you the answer. And if you are sitting in a drawdown right now, genuinely not knowing which these 4 it is, that's exactly why we built a 21-day trading reset. In 3 weeks, we find your actual leak and walk you out of it step by step. Everybody tells you to journal your trades. I tried, and the only benefit was that I got really good at writing down, be patient and follow your rules over and over. Decades of research on surgeons and military operators proved one thing. A person analyzing their own work after a bad outcome is the least reliable witness in the room. So the more a trader journals, the more confident they get in the wrong diagnosis. They read other psychology book, they watch other psychology video. But next week, same problem, same behavior. At this point, the trader has more inspirational quotes on their wall than a fat fitness coach, and the same result to show for it. But it gets worse, because the more notebooks they fill, the more they believe they are working on themselves. So when somebody asks why they are still losing, they have a fancy answer. I'm working through some psychology stuff. Now the journal isn't just useless, it's the alibi. And here is the scary part. The journal actually becomes their permission slip to break the rules. Because every garbage trade now has a safe place to go. They write down their sins, promise to be disciplined tomorrow, and they get a false sense of relief for feeling accountable. It's a confession booth that resets the guilt, so they can do it all again. So move the notebook to the other side of the trade. A journal asks, why did I break my rules? After the damage is done, when your brain is lying to you. A pre-mortem asks, where am I going to break my rules? Before you entered, when you can still do something about it. Once you fix all this, you will finally start making money and want to scale up. But scaling isn't just multiplying your lot size. To avoid blowing your account while scaling, there are 5 steps you need to work through. Traders assume that if a strategy works perfectly on a small account, they can trade $500,000 with the exact same mindset. You need to accept that your trading edge won't break at a higher capital, but your biological hardwire will. A 1% drawdown on a 50k account is $500. Your brain categorizes this as a minor expense. But a 1% drawdown on a $500,000 account is 5k. The math is identical, the physical sensation is not. Because your brain translates that bigger number into a real world damage, like crashing your car. It triggers the choke effect. You see $5,000 of floating profit, get terrified of losing it, and you close the trade at 1 hour instead of your planned 3 hours. You suffocate your winning trades because the absolute cash value feels too heavy to hold. To stop the panic, you must remove the trigger. You need to do everything so you don't need to look at the live trades. You need to use alerts, EAs, anything that you can. You never jump blindly to 5x the capital. You increase it in controlled, deliberate increments. You are not doing this to manage risk. You are doing it to desensitize your brain to the heavier numbers. And when you finally master scaling and the money is flowing, you face the final boss of trading. Most traders think being a funded, profitable trader is a high adrenaline lifestyle. And that is the furthest thing from the truth. George Soros managed billions of dollars, and he revealed the most uncomfortable fact about the markets. He said, if investing is entertaining, if you're having fun, you are probably not making any money. Good investing is boring. And trading works the exact same way. Human biology hates boredom. It craves constant simulation. Hence why we had so many animations in this video already. So when you lock your rules, accept the variance and scale your capital smartly, trading becomes brutally boring. You sit at the screen for hours and your setup just doesn't show up. Or if you're a swing trader, you might not get even one trade in an entire week. You can't watch more YouTube videos or try to find the holy grail strategy. Profitable, experienced traders blow their accounts out of boredom. To survive this, you have to completely separate your need for entertainment from your need for income. If you want excitement, take your payouts and go skydiving. Or have a gambler account, put 10-20k on it and go crazy. But when you sit down at the charts to make money, your only goal is to be as boring as possible. If you are still watching this, you just proved you have the one thing that 95% of traders lack: the patience to actually fix the real problem. And you get much closer to profitability. But if you still feel forced to jump from strategy to strategy every time you hit a drawdown, you need to watch this video next.